All right. Hello, everybody. Thank you for taking time to join us. I am Randy Smith with Keller Williams Smoky Mountains, your VA friendly agent. And with me again today is Mr. Don Warren with Southwest Funding. I got it right this time. And he has been a wonderful partner in crime, but partner nonetheless in helping me put these videos together. And honestly, he's really the brains behind the project. Let's just be clear about that. But we are trying and working our best to bring you great information for those that are going to be purchasing property with their VA loan benefit. And the topic today is pretty simple, but it's really super important information. We're going to talk about that person who is buying a property for the first time with their VA benefit and sort of what they can expect, right, Don?
Absolutely, absolutely. And it's extremely important on this for people to realize that you may be closer, or you uh may be already possible for you to get qualified for a home loan, especially a VA home loan,
Mhm.
because we get the question about, well, what all is involved. So let's go over some of that information today and do that. It's not going to cover everything, but
Right.
it comes down to just kind of some very simple facts on there.
Yes.
Yes, underwriting likes to have a lot of documents, it seems like, for those and to support those, but that's because there's things in place to prevent fraud. One document may state one thing, but may something else may be requested that kind of backs and confirms that that is true. So there's a purpose in every document that is requested. But let's keep this very simple today.
Mm.
What I like to say is the foundation of the VA home loan is the certificate of eligibility. Without
Yes.
that, there is no home loan. So if you're working with another lender, they give you a pre-approval. Check with them to make sure that they've pulled your certificate of eligibility, because there can be, most of the time everything is fine, and I can pull a certificate of eligibility within just a few minutes with
Right.
just a social security number and just a year of birth. And if anybody wants to make sure that theirs is in order, reach out to me. I'll get you on the phone and we'll see about pulling that. That's not a problem. Glad to do it. I don't care whether you're purchasing a home, want to buy a home tomorrow or 5 years from now. Let's make sure that that is in order, because there are situations where we might have to send in additional documents to the VA, or that you might have to request documents from the archives, or that you haven't earned your entitlement because you haven't had enough length of service, or your character of service isn't right. There's different situations, but actually more people qualify, are entitled to it than what they think. So that is extremely important. On there is a certificate of eligibility. A good lender will pull that pretty much as soon as an application comes in, or even I'll pull them when someone calls in. Just I'm talking to them about the process, and if I happen to be on my computer, I'll say, okay, you mind giving me your social security number? Let's pull this up. Boom, we've got it. We know we're good to go. So that's the foundation. Once
And
we
I
have,
will,
yeah,
yeah, and I'll tell you, I worked with a VA buyer. Gosh, I want to say this was probably in 2021. Had a pre-approval letter. The lender will remain nameless unless somebody asks me specifically, and then I will tell you. Um, had the pre-approval. We were probably 2 weeks into the process of being under contract, going through inspections, so on and so forth. And all of a sudden, the lender tells us there's a problem with the COE, the certificate of eligibility. They needed additional documents, something to that effect. It wasn't that the buyer hadn't earned their VA benefit, but there was some sort of documentation issue that I don't recall now. So when I said, well, how did we not know this from the beginning? You know, we've lost 2 weeks to work on this. Well, we just pulled it. We got to know up front so we can navigate those things.
There's too many things that can go wrong on there.
Yeah.
The vast majority of the time, I would say over 80% of the time, I can pull it within within just a couple of minutes of going online. But there are the times where you can't pull and we have to send the information in, or there's certain other things, or if we get the COE, there might be certain things on there that that we have to reach out to the VA for to get other documentation and stuff, because that document tells us a whole lot of different things. There's
Right.
words, there's phrases on there that we look for, and it tells us everything we need. And I've seen a lot. I actually did a course for some lenders about just the different things that you see on the certificate of eligibility and what they mean on there, because there's just a variety of things. But there is one particular lender that generally will not pull a certificate of eligibility until a few days prior to closing.
Oh.
And now, not all
Mhm.
of the loan officers do the same thing, I think, but I think that the way they're set up, they have a department that does that, but it's generally it's maybe a week or so before it's supposed to close, or a certain part of the process.
Okay.
It can cause too many issues. So this is why I say, if anyone has a pre-approval, make sure the lender has pulled it.
Yes.
Make sure on there. If you're another realtor watching this, whether you're representing the buyer or the seller, make sure that they have pulled it. I mean, I
Yeah.
guarantee you that if it's me, it ain't no pre-approval going out until we've pulled it. Also, it does not allow, if we don't have the certificate of eligibility as a lender and someone's under contract, we cannot order the appraisal without having that in hand.
Great.
We were talking, previously we were another video, we were talking about VA renovation loan. There are certain things that we cannot do until we have the certificate of eligibility. It's the foundation from which everything else is built.
Well, it only makes sense. I mean, the whole purpose of the VA loan benefit, it's for our military personnel and veterans. So we need to prove that they go hand in hand.
Yeah, and here's a little secret as well to all veterans. You can actually go onto va.gov and request your own certificate of eligibility.
Yeah.
You can do that. If you run into any issues with that, or you want me to pull it, again, even if I'm not the lender, let me pull it. Let me, we want to make sure that it's when you're ready to buy a home, that it's taken care of, because there are the situations where it may take a few days, or it may take over a year to get
wow.
on a rare occasion, and that's a rare occasion on there. So I mean, generally, if it starts taking too long on there, what we need to do is get the congressional office involved so they can put pressure on the VA for them to take a look at it. There's that option
Right.
to
Okay.
do that. So definitely. So it tells us everything that we need to do on there. So certificate of eligibility, we can't
Outstanding.
stress on it enough. Let's get it there. That's the foundation. So hey, we've got that. Let's assume we've got that. We know what's going on. Okay, so especially first time buyers and hey, I've been there. You don't know what you don't know
That's right.
on there. And so it can be a daunting process. Okay, what are they going to ask? What are they going to check for? What's this? What's that? How is it that I get it, pre-approved? Basically, we're on the foundation now. So let's build the main 4 walls of that. And with with each wall, hey, we can start building the rooms and everything with that's pretty much attached to those walls. First thing is income. Where's your income source coming for? And is it a continuing source?
Right.
Income is the first thing. We want to take a look at that. Generally what we want to do is take a look at, and this pretty much goes for any loan. What's your 2-year job history? It doesn't have to be the same job.
Mhm.
It can be multiple jobs, but you don't really want to have too many jobs. I know FHA really frowns on that. Hey, even job gaps can be okay, but if they get over a certain length, then it may be you may need to have a letter of explanation of why you were off for 6 months on that.
Right.
We might have to go back even a little further on that to show that you were working. So generally, that's not a problem. A lot of people have been working a long time. But also, what can count as income? Okay, we mentioned job. Okay,
Right.
so okay, you're on a job. You get paid hourly or salary. Okay, so that involves some things. Okay, is there variable pay like overtime or bonuses or anything? Generally, we want to have a 2-year history of that type of pay, whether it's the same job or you get that same type of pay from a previous employer as
Right.
well. We can use that. So there's things with that. Excuse me. All right. There's a lot of veterans that may be getting. There's a lot of veterans who are entitled to service-connected disability pay. We
Right.
can
Yep.
use that. We can actually gross that pay up when needed, to help the veteran out with that. So that can be used. Social Security pay can be used on there. Self-employment. Generally, we want to have 2 years of tax returns. So there's a lot of other situations on that, but there's a lot of different income sources. What we do is we take a look at what's applicable to you on there. Hey, if you receive child support, child support can be used on there. If you foster, depending on the situation on there, that can be used because there has to generally have to be a history on there. So there's a lot of situations for income that we can do on that. Most people fall under the I work for a living. Yeah, I get my W-2.
I've heard that term a lot. I work for a living.
I get my 1099 and everything. But just as long as there's a history of there, that's what we want to check on. So that's the income wall. Let's go over to the credit wall. Ooh, this is a big scary one on there. So credit wall, what is it specifically that the VA looks for on there that they require? Not that the lender may have an overlay on, and I'll tell you, one in particular on there, but what's your credit score? Credit score, the VA doesn't care what your credit score is. That's a little secret. But what you want to do is you want to do everything you can to increase that credit score. I'm going to tell you, and we'll mention a couple things just in this video, but we can take a look at anybody's credit report and give them an idea of how they can make probably a couple little tweaks to do that. So what the VA is more concerned about on there is, have you made the last 12 months of on-time payments for anything other than housing? If it's on the credit report, it needs to have on-time payments for at least 12 months.
Right.
Vehicle payment, credit cards, whatever reports to the credit bureau. If you don't have enough things reporting to the credit bureau, okay, do you have a cell phone? Do you pay car insurance? Do you pay any type of utilities? As long as there's a 12-month history, and we can document that up to 3 of those items have 12 months of payment history, we're good with that. For housing expense, whether it's a rent or a mortgage, generally that's going to be a 24-month history on there of on-time payments. This just shows the lender, it shows the underwriter, shows everybody who's involved in looking at that you've established a pattern of, I am responsible for making the payments on time that I have agreed to. That's what that's about on there. If there's collections or judgments or things, yeah, well, we've got to consider those judgments. Pay those off. Just pay those off. Keep the documentation on that. That becomes important. But there's other, there's just certain things with that. There's, collections. We may have to figure that figure that into the debt to income ratio on there. It can affect how much you can borrow, but the main thing is with the credit is pay your bills on time.
So you said that in our class last fall, and not that I didn't know that, like, that, right? You got to pay your bills and you're supposed to pay them on time. But just thinking about what an easy thing to do in regards to processes, and certainly I respect the fact that, at some point in time, we've all probably fallen on tough times financially, and things have been late or possibly gone to collections, and it happens. Heck, I've been there. But knowing that if bill number A is due on the 15th, paying it on or before the 15th is one of the easiest, most important things you can do to help that. Am I right?
Oh, absolutely. Absolutely. The late payments on a credit report are harder they take longer to they draw out the pre-approval process, because yes, if you have a nice credit profile, later too may be overlooked. Hey, you got a 750 credit score or whatever. But there's a lot of things on there that works in the favor of the buyer. But especially if you're kind of in the lower credit score range, if you don't really use that much in the way of credit on there, paying your bills on time is the easiest way to get to a pre-approval faster on them. It really is. We just had someone that that applied for a loan. They were telling me that, yeah, they've been doing good on their credit, on their payments. But when the credit report was pulled, they've had a history of over 30-day lates.
Oh,
the last one being in September.
That's really
They're gonna have to wait. As a veteran, unless their credit profile really gets stronger between now and then, they're going to have to wait till probably October of this year, to be able to proceed with the home loan. So that is a difference. Now, other loan programs, it varies on how they look at lates and everything, and whether it's an installment loan or revolving credit, and how they look at those things. But for VA, pay the bill on time. You've got a 12-month clean on-time payments. We're good. That's extremely good. But here's something else as far as credit. You also is one way to really help the credit score is if you have revolving credit, keep a balance of less than 30% of your credit limit.
Gotcha.
5 to 10% in my opinion, seems to be the sweet spot. Anytime that I've played with a what if scenario on the credit report, that seems to be the sweet spot. Generally, you don't want to pay it. If you're trying to squeak out as many points as you can, you don't want to pay it to zero balance on there, because it starts looking at it as you're not, you've got it, but you're not using it. And therefore they don't know whether you're able to make payments on time. if it's five, if it's 5 to 10%, if you got any type of balance on there, hey, you're paying some type of payment every month on time, and that seems to squeak out a few more points. Anything less than 30% is positive on the score, but 5 to 10% seems to be the sweet spot. Anything above 30%, it starts hurting your credit score.
Right.
And that credit utilization on there, I think makes up about 30% of the credit score.
The overall, okay.
Overall on there. So
Right.
that is extremely important. Another thing is too is, should I pay off any of my debts? If you don't need that money to help to qualify for more of a home, and depending on what the situation as far as with credit score, because sometimes it won't make a difference on there. You can go ahead and pay it off. It frees up this money, and you're still going to have a score that gets you qualified on there. You should be okay with that. But installment loans, you want to have those open at least 12 months. Anytime you close a loan, then that's one less trade line that can tweak down your credit score. So those are some tips. But yeah, we've kind of gone farther into that than
I know.
but the main thing is credit. What we do is take a look at 12 months of on-time payments. We don't care what your credit score is, but you want to do everything you can to increase and put yourselves in a better position, because there are different levels of credit score where the higher you go, that's going to help with a little bit better pricing for you on the loan cost.
Right.
On there. So do everything you can. Third wall, let's go into the third wall on there. Okay, well, those things are good. We can get you pre-approved, but do you have enough money in your account to bring to the closing table if you need to bring something to the closing table?
Right.
Some people have a good amount of savings on there, and it doesn't matter what the closing costs are. They're fine, and they can and if you're in that position, so save. My thing is save. Instead of going and spending money on $10 on a fast food meal today, take that $10 and put it into savings. Do that every day, or do whatever you can to put money into savings, because everything that you have is going to help with that. But it helps your negotiating power when you're going to buy a home. However, say that you only have $1,000 maximum that you can put towards closing costs. Well, that's fine. It helps, but it helps us to know, so we can let the veteran and you represent, you, Randy, representing the veteran to know that, okay, they're pre-approved for this amount, but they need some help from the sellers to pay. The sellers will need to pay their as much as closing costs as possible. Yeah.
Right. Okay.
And that can limit the homes open to them. But fortunately, a good realtor like yourself is going to be able to negotiate that in there, come up with the right deal with that, because it just helps. It helps to know. So our goal is to always help veterans get into homes with zero down, zero money that they bring in, that they have to bring to closing, because you got zero down payment, but you have closing costs. The fourth wall on this is the other thing that the VA looks for is we have to do a sheet on every loan. Is do you as a veteran have enough money left at the end of the month to pay for food on the table, to pay for the child's clarinet lessons, to pay for whatever on there,
Right.
because they take a more realistic approach at that than other loan programs. Every one of those 4 walls have different things that will come off of that we may need. And we'll just get the, and generally it's not much on there. Each situation is different.
Sure. And you know, I'm giggling about the clarinet lessons and, taking a look to see what's left over at the end of the month. And I mean, I love that because that's such a practical approach, right? It's so easy to say, oh, well, I'm paying 1,500 in rent now, so I know I can pay 1,800 for a mortgage. And then you sit down and you start doing some basic math and you're like, ooh, that might be a little bit tighter than I thought, or yeah, so I love that.
Well, you can reverse that too, because I've
That's
seen,
exactly right.
well, we'll use your numbers. I'm paying 1,800 a month in rent right now. So yeah, I can do the $1,500 payment. You have to consider this on renting versus buying.
Mm-hmm.
You have maintenance costs that you are
Yes,
now responsible for. And this is extremely important.
yes,
It can be a shock to the system on there, but you want to have as much set aside that you can. But here's
yeah,
something as far as you know what? I don't have any money saved up, but my lease is expiring and I'm gonna have to move. I'm gonna have to
right.
go, I'm gonna have to go rent another apartment. Okay, well, what are you gonna need for that apartment?
Security deposit,
It generally first
application
month and
fee,
last, yeah,
or
first
yeah,
month, last month, whatever.
yep,
That think of it that way. You can have to change your thinking on that
yes.
and go, okay, I've got that. Let me go ahead and put that aside, and that's what that's for. One other thing on this is, you know what? Money that you put aside, if you're not planning on needing that money for 3 months, 6 months, 9 months, a year, put it into a CD. It's going to get you a little bit extra on there, and
There you go.
CD rates are a little bit better
Yeah,
right now. So, and it kind of ties that money up where you're not tempted
there you
to,
go. Dig
to
into
use
it.
it to go buy that new clarinet.
Yes, they can wait.
Absolutely. Love your kids, but love getting your kids into a house.
Yep, yep. And now, something important to point out here, obviously we're talking about some particulars that really truly are specific to that VA loan. However, most of what we're talking about is just good practice to get ready to purchase a home anyway. You know, watch your debt levels, make sure the payments are getting taken care of on time. If you're working on improving your credit score, as you mentioned, strategize and think about the ways that you can squeak out those extra points, as you said.
Yeah, and sometimes I'm I'm not a big believer in credit repair
Mhm.
on there. It definitely has its purpose, definitely.
Sure.
But if you're going to do credit repair, you have to be serious about changing your habits. They can maybe get things cleared off the report, but if you haven't changed your habits, they're just going to be back on the report on there, with something else. So you have to change your habits first on there. Then there might be some things that it might help to get cleared up off of there, and it was very helpful with that.
It's
So,
like trying to lose weight, right?
oh,
It's a lifestyle change. They tell
it
you not to
it
call it a diet or, but it's really about changing your habits. It's a lifestyle change.
but the nice thing about this, and just from a personal perspective, one, I didn't when I was I waited to buy a home probably a lot longer than what I should have on there, because I'm thinking, okay, I'm not going to qualify
Oh
and do
yeah.
that. This was way before I was into lending. Uh, but this is why I like doing this, is because I can let others know what a difference it makes. Going from paying somebody else's mortgage, as people like to say,
Yes.
paying my own mortgage.
Mhm.
I look now where we're at just from this standpoint of owning a house, that is paid off and has been paid off for a while. And now we have no more housing payment, housing payment to live there other
Right.
than paying our utilities, paying the property taxes,
Yep,
you
yep.
you're paying the insurance. That's a big difference, especially considering where, our principal and interest when we first bought was like, 500 and something dollars. And I look now, it's like, no, no. Yeah, then when we sold our home and moved to where we are now, we were able to pay cash. The amount that we sold it for
Mhm.
more than paid for all the principal, for the interest, for new roofing that we had to pay, that we ended up paying for at one point.
Okay, right.
AC system and some other things, and we have money left over. So we basically, I look at it as we live there for free
That's amazing.
on there. So it's a difference. It's a
Yes.
difference maker on there, and more people can do it. And the thing is I encourage everybody, get with Randy, get with myself, or another lender that will help walk you through. Make sure your lender, make sure your realtor is responsive to you, because
Yes.
I hear of lenders, I hear of real estate agents too, but I
That's
hear of
right.
lenders that they will never ever, they rarely communicate with their people. They just go, oh, here's the application, boom, you're not qualified,
Yeah.
and that's it. We want to get you on a path. We want to get you into a home. You can do it, but you have to take responsibility for yourself
Yeah.
and for your family, and your goals. Hey, another
It's
little secret, veterans. Not only can you buy a single family home, not only can you buy a manufactured home on a permanent foundation, you can buy up to a 4-unit property and rent out those
exactly.
others on there. So there's options, options, options. That's all I can give you.
That's exactly it. And, just kind of going back just a little bit in regards to what you said about a lender and a licensed realtor, um, it's about building that partnership and working side by side with somebody that you can communicate with, you can trust to help give you factual information, and trust that if they don't know, they're going to say, I don't know, let's find out.
Absolutely.
They're going to be there with you because it's an adventure.
It's it's not just a transaction.
No.
It's a team. It's
Yes.
definitely a team effort. And also, when you you're a first time home buyer looking to start this process, just be upfront, just be honest
Yes.
with everybody. Uh, do not go buy a new car before buying a home.
No, do not.
Don't get any installment loans before doing that. You're going to bring, and shoot, maybe we should do a video on this one day, is just what the effect is of having an installment loan of different amounts uh, on situations, and how that affects the purchasing power.
So
But
listen to
also,
this. This is the number, the statistic that was shared with us at a convention in August. The purchase of a $50,000 automobile drops your home buying power by $200,000.
yeah, yeah, you,
Yeah.
I see those things, and I haven't run numbers in a while on that, but you see those things on there, and it's like, and some people think that, okay, I don't have an established credit yet. Okay, hey, I've been able to get this car. That's one thing on there. Or they go get a credit card and they max that out. You don't want to do that. You want to do everything responsible. If you are just starting your trying to build a credit profile, go get a secured card for $200 or $300, buy a tank of gas on it, pay off everything except for $5 or $10 on there, and just keep doing that. Keep it very responsible.
Yep.
Keep the utilization less than 30%. One guy did that over in North Carolina. He's an old man like me on there. His wife was the one who had the credit profile. He did that. The first credit score that popped for him was 700 and something
Fantastic.
on there. So you don't have to go get something massive on there.
Right. Fantastic. I love it. Well, again, man, great information. Our sincere hope is that you will continue to follow along. Like, subscribe, comment, share. What this really is all about is getting the information out to everyone. And again, when we say everyone, that's really what we mean, because this is great information for folks who are in the industry with us, working side by side, folks that may be selling their homes, obviously the VA qualified buyer. I mean, it's just great information, period. So please continue to join, drop your questions, drop your comments on topics you'd like to hear us discuss. They don't have to be VA driven. I mean, that's obviously a passion for the two of us, and we'll continue down that road for sure. But any sort of questions you have, we'd love to hear it, and maybe we can put together a form and some topics for you.
Absolutely. Everybody's unique on there. So what we talk about is a lot of generalized stuff, but we have to take a look at your particular situation.
Yes, exactly right. Well, very good. Well, Don, thanks again, and we'll look forward to seeing you next time.
Wonderful. Thank you.
All right, take care, everybody. Bye.